Hey, what's going on, everybody? Welcome back to Bonafide Investing, where we talk all things high yield investing, as well as options, futures, and really investment goals in general. If you're new to the channel, welcome. A little bit of background on what we're doing here. This cash flow life account, portfolio, whatever you want to call it, I've been experimenting with high yield strategies for about the past year and a half. But what I did, I brought over about a quarter of my net worth, and using my own equity as well as margin, I've constructed what I call an all-weather high-yield portfolio that will, number one, pay all my bills, and number two, maintain and pay down my margin over time. All the while dollar cost averaging back into the strategy to control for volatility, NAV erosion, as well as just building that cash flow income to offset inflation as well. If you like what we're doing here at Bonafide Investing, please hit like and subscribe. Please support the channel. Nothing here is investment advice, not now, not ever. Although I was a financial advisor at one time, this is never financial advice. So what I want to talk about today, I want to talk about just some portfolio updates, what a year 2025 was. Hope you guys all had a good new year. Looking ahead though, 2026, markets are forward looking, and I think we should be as well. So wanted to give some updated numbers. I did bring over about $90,000. I decided to take $10,000 and max out my I-bond maximum for 2026 instead of bringing over the full $100,000 that I initially planned. I like I-bonds. I like it for just the inflation protection. I know that many would say that the CPI is the CPI, and I agree. But at the end of the day, I think it's just a good emergency fund. Good place to put idle cash since that interest is tax deferred. And I've got two kids that will probably attend university or trade school or whatever, by the time they get there. And you can use a lot of that interest for educational purposes, which is nice. So when it comes to that piece of my portfolio, my overall net worth, I do like to keep my large cash of I-bonds intact. So without going off too much on a tangent there, I brought over about 90K. So a lot of the numbers have changed in cash flow life. Right now, the total value across all options, all stocks, currently sits at $523,541. The income produced from that value is currently $287,000. More specifically, $287,624.87. That is a 55.4% yield. And my bills are currently $115,212 per year. I'm going to make a video probably over this weekend just about investing and budgeting and what goes into a lot of these numbers. But regarding that 55.4% yield, this portfolio is currently paying me. That's a one-off. I want to be clear. My yield's been generally closer to the 25 to 30% range. The reason for the large bump was that QDTE, XDTE, and RDTE decided to pay just monster distributions to end 2025. So that skewed a lot of the income. I expect this income amount to drop significantly in the coming week. I'm currently using 87.5% equity and 12.5% margin. The margin amount is definitely on the lower end. I like to stay between 10 and 30%. But as I've mentioned already in past videos, I'm going to buy back into YQQQ, which is a covered put strategy by YieldMax that just hedges to the downside. I did buy another put on SPY and QQQ yesterday before market close. I bought them at a limit order, wanted to see if I could snag them a little bit cheaper and was able to, which was nice. So I am good on my long puts for right now. So since they are long lead puts here on QQQ and SPY, I'm controlling about $525,000 between the two of them on the buy side. So I can exercise them anytime I want, but they are my portfolio, my crash protection. So I'm not going to be buying any more puts, at least of right now. But if this market keeps melting up and stays irrational for longer, then I will probably add to the puts, as I do think that we are going to have a significant correction, if not a crash, probably over the next couple of years is my thought. But hope I'm wrong, but I think we're long overdue. And I've given my many reasons already. Won't talk about it here, but we'll talk about it again in the future as we go. But again, what is the main point of this portfolio is I want to hedge, right? I always say need over greed. I want to first realize, okay, what can I lose versus what can I make, right? So if this portfolio grows, great. It is high income. So I expect income first, growth second. But again, as long as it's paying my bills, it is not eroding too badly over time and is doing its job, then I will keep adding money to this. So I wanted to give some of the updated numbers on the margin as well. If you look down here, margin buffer, currently sitting at 65.84%. I expect that number to drop on Monday when I do add YQQQ. I'm thinking I'm probably going to buy 4,000 shares of that. And just like I added to KYLD on Friday, I'm going to use YQQQ as just a hedge through 2026 as I expect volatility to pick up. So if volatility does pick up, I think YQQQ will be a nice hedge just to keep that balance across the portfolio. And then I would be dollar cost averaging back into this strategy as prices potentially go down on a lot of these holdings. So that's the strategy there, really. Right now, my margin used is 65,524. That's going to bump back up to probably right around 110 to 115 is my thoughts. And I think I'll be done buying outside of my dollar cost averaging, which is every market day. I don't really see a lot, any more ads. I have mentioned that oil is my spec play for 2026. I did buy a Leaps call on USO and I bought a Leaps call on XOM. So again, I can, on the buy side, I can exercise those whenever I want. I usually sell puts weekly to generate extra income for the portfolio. Last week, I sort of took a break to kind of round out the year. Didn't really see a lot of opportunity there. And I don't mind taking weeks off when, there's nothing there. I won't just sell a put or buy a call or whatever just to do it. So we'll see if there's any opportunity this coming week. But right now, even on the blue chips and utilities, where I like to sell puts, I just didn't see a lot of premium that was really worth the effort. So again, wanted to give some update there on the portfolio. Right now, again, we'll see how 2026 starts off. The greed and fear index, that was pretty wild last week. We swung from greed back to fear within a couple of days. We're back at neutral as of this morning, but it's pretty interesting to watch. I always personally, I like it when there's fear in the markets. I think that's when things are a little bit more rational. I think there's less downside risk when there's a lot of fear. And when it goes back to greed, I always want to be careful, right? So again, I think we might grind higher. We'll see. But I think this first couple of weeks will be very telling. There's an old adage that, as January goes, so goes the rest of the year. I don't really know how much truth there is to that, but looking at the charts, there could be a little truth, right? It's the same adage as sell in May and go away. I've never seen a lot of truth behind that one either, but it is what it is. So like I always say, when it comes to these markets and with your investing, trust God, trust the charts, trust the math. Don't trust the talking heads, the politicians, and the bankers. So hope you got something from this video. I will be probably kicking out another video or two this weekend. And thanks for your time. Have a great day.